Welcome to Illuminati Silver. We tell you the truth about silver. Today is Saturday, 13th of February 2016, and we're providing our gold and silver update for week ending the 12th of February. Gold rose in US dollar terms last week by $64, from $11.73 to $12.37, having been as high as $12.55 and as low as $11.65. In sterling terms, it rose by £43, and in euro terms, it rose by €47. Silver rose 77 cents from $14.99 to $15.76, having reached a high of $15.93 and a low of $14.90. In sterling terms, it rose by 52 pence, and in euros by 0.56 euros. The gold to silver ratio rose slightly from 78.2 to 1 to 78.5 to 1, showing the added strength of the gold price compared to silver. Gold and silver showed very strong performances last week, and in particular towards the latter half, after Janet Yellen gave what many regard as a dovish statement on the US economy, plus the use of that word accommodative, interpreted by analysts that interest rates were unlikely to rise anytime soon. The Dow Jones closed on Friday at 15,973, up 313 points on the day, and the Nasdaq closed at 4,337, up 70 points on the day, but both were down a little on the week and some 11% down on the year. Friday saw the Dow and other markets across the world move into positive territory, primarily because of suggestions that OPEC were going to cut oil production. This resulted in Brent crude rising some 9.3% on Friday to $32.86, and US light crude rising an impressive 12% to $29.36. The dollar index stands at 95.94, falling some 0.62 points since its previous Friday close of 96.56, but up 0.4 on Friday after that oil announcement. So, gold is 5.4% higher this week, and silver is up 5.1%. The continuing weakness of the dollar, falling stock markets, Janet Yellen's dovish statement on the US economy, and its potential impact on interest rate rises all contributed to these rises in gold and silver prices. In addition, we have to state that there have been signs of further central bank buying of gold and some institutional interest as well, in view of the fears many have over the stock market position for 2016. Again, China's slowdown is frequently referred to as a reason to be concerned. In our review last week, we ended our commentary with the words about gold and silver, quote, "Yet despite their 9% and 8% rises, adding geopolitical turmoil into the mix, their prices should be considerably higher." Well, in fairness, their prices did catch up a little last week, but again, temperance is important. Their prices are still only standing within a couple of percent of what they were this time last year. Yes, a great improvement compared to a month or so ago, but no higher than 12 months ago. So the question everyone is asking is, where do we go from here? There is no doubt that every gold and silver pundit is attacking the airwaves with gold going to $5,000 to $10,000 an ounce and silver $50 to $100 an ounce in 2016. Well, we have been here before. In fact, each and every year, the same message has been given by the usual suspects. The question is, are they right this time, even though they were wrong in the past 5 years? Well, we shall give you our thoughts on this in a comprehensive 2-part video series, with part 1 being broadcast on Wednesday and part 2 next Sunday. What we shall say in the meantime is that unless gold breaches the $1,300 level and holds, in fact our personal data states $1,350 spike breach, and silver the $17 level, then we have not seen a real turn in the cycle. So tune in on Wednesday and next Sunday, and we shall give our comprehensive forecast for gold and silver for 2016. We hope you have found this video interesting and informative, and if so, please give it a thumb up and share it on Twitter. Also, kindly visit our website at www.illuminatisilver.com and look at our Facebook page, which is updated daily at www.facebook.com/illuminatisilver. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.